Let's look at the required Part A. Calculate the VAT implications of the matters discussed in Issues 1 to Issue 5 for the 2-month VAT period ended June 2019. So this is for May plus June 2019. So as always, guys, please clearly indicate what question you are doing at the top of your page. Description, calculation / explanation, and you can either do a rands column here with a separate heading for output and input tax. I usually do that, but in the solution you'll see I actually did 2 headings, output tax and input tax. You're obviously welcome to do whichever one you want, but the most important thing, which I just warn you against, is always just make sure, guys, that you put it on the correct column. Otherwise you'll lose unnecessary marks. So issue 1 to issue 5. So let's go and see issue 1. Okay, so issue 1 is a situation where the person overpaid us. Now they're asking us for May and June, so the initial transaction was in the earliest of 6 Jan or 7 February, so it happened in January, so that is not our concern. However, we saw that if they pay us on the 7th of February and 4 months pass, it'll be the 7th of June. The 7th of June falls in our VAT period, and per section 1026, we should calculate it. That's the timing section. We should include that excess now. So, issue 1, excess consideration received, and it's a deemed supply per section 827. So 210,000 minus 189, was it? Yes, 189,000. So that's the excess portion, and now you calculate it as if that was an amount received including VAT. Okay, so output tax, guys, make sure you see that. Issue 1. Issue 2, so remember also if he later on repays it, does manage to repay it, then he can claim that amount back as input tax. Issue 2, on the 15th of May, he entered into a lease agreement, so that's the installment credit agreement. Okay, so important things earlier of invoice or registration, which we can only see is the 15th of May, is the only information we get, and we also know that you claim it on the cash cost. On cash value, that is the timing rule, the value rule, earlier of invoice or payment, that is the timing rule. So guys, unless they specifically ask you for section numbers, this should be sufficient. You need to know the theory. I'm always just make this comment. If they do ask for section numbers, there will be some marks allocated. Some students say half the marks. That's crazy. That's definitely not the case. It'll be a 2 or 3 marks, basically like a presentation disclosure mark. Okay, so the calculation in this case is 195,500 times 15 over 115. And I'm just saying that also, guys, about the marks. You should never, if you know your theory, everything, and you don't know the section numbers, you will still get more than a distinction. Yeah, a high distinction. That's basically what I'm trying to say. So it shouldn't be the thing that fails you. But it's a good place if they do have those extra marks scored. So that's why whenever you do all of these questions, always try and put down the section numbers. You'll find the way that works for you best as you continue doing it. So it really is the best way. Issue 3. Alright, so this is now that antique table. So one thing that we can see is 8th of March is when this person had their first 3 monthly installments. So they paid March, April, May. So May is in our tax period, so we can claim input tax for May. Okay, so this is the payment, claim, notional input tax on second-hand goods from a non-vendor or from a person that did not charge VAT, if there was no output VAT charge. So that's 30,000 rands times 15 over 115. Remember, you claim it on payment. So input tax 3913. So this is the May payment. Okay, then what happens? We spend 14,000 rands to restore this. Restoration costs 14,000 times 15 over 150. Input tax, guys. And then we exported it to a person in Munich, in Germany. 500,000 rands. I'm sure I'm mispronouncing it even still. Right, this is usually zero rated, guys, but because we claim notional input tax, you have to repay the notional input tax. Now, how much was the notional input tax? It was 30,000 rands times 15,115 times 3, because there were 3 monthly installments. So sale is not zero rated as notional input tax claimed. So let me just quickly, I'm just putting it in a different color just to show you. What is the total input tax that we claimed on this? It would be 30,000 times 3 times 15 over 115. $11,739 plus this restoration costs that we had now, 1,826. Right, now what I want you to see is this rule that we're talking about when you sale it, this export, it's only the notional input tax that is repaid. The other amount you can still claim. Remember, if I made an export, if this was a pure export, if I had not paid notional input tax, then there would have been no output tax and I would have been able to claim this amount in any case. It's only this notional input tax here that's the issue. If it was actual input tax, so if I borrowed from a vendor, I would be able to claim it. Okay, so it's just that notional input tax that causes this issue for us. So 30,000 times 3 times 15 over 115. So this is what, guys? Output tax. Make sure you see. Right, let's pay back the notional input tax claimed. Then we have issue 4. Mike employs 2 assistants, 8,000 rands a month. Okay, so ready for us. Those salaries, it's not an enterprise. That is the correct answer. If you said no VAT or anything like that, you'd probably not lose a mark, but guys, that is the correct answer, not an enterprise. It shows that your examiner, you understand. Okay, so this is now the people that went down to Cape Town. The client was invoiced 80,000 rands for the services. So client work, 80,000 rands. So this is output tax, guys, times 15 over 115. Okay, then hotel accommodation, 5,000 rands. So 5,000 times 15 over 115. Input tax, guys, there we go. Meals in a restaurant, 1,650. I'm just going to make a comment here. May claim entertainment as obliged. Remember, you need to explain yourself always to spend one night away from home. Okay, car rental in Cape Town. That we know, input tax denied, section 17(2)(c). Insurance on the rental car. Okay guys, you can see we don't do that apportionment which we see in the next issues. Remember, the reason for this is because that is only for the building where it was apportioned. And then return flights 1,900. Right, and then issue 5. So issue 5, guys, this is where we received an indemnity payment of 120,000 rands from our insurers. Remember, 70% of the building we could claim input tax on. So we claimed input tax when we originally purchased these air conditioners. Now when we received the indemnity awards, there's a deemed disposal, so we have to calculate output tax. Output tax is usually calculated at 100%, but except for indemnity awards and fringe benefits. So that is why we have to apportion this output tax by 70%. Okay, so issue 5, indemnity award received. It's a deemed supply per section 8.8, and it is 120,000 times 15 over 115 times 70%. That would have given you 2 marks. And it is output tax, very important. Alright guys, so this question I didn't necessarily want you to add everything up. I didn't ask for the net VAT payable, but remember you will usually add up output tax and input tax. Then output tax less the input tax. This is what section 16 tells us to do. That gives you the net VAT payable to for SARS or refundable by SARS. Alright guys, and that is the first part of the required. I will look at part B just in our next recording.